Welcome to Blockchain Tech and Finance News with me, your host KinToshi. If you're on the YouTube side, please do subscribe, turn on the bell notifications. And I'm going to check the monitor levels, and we're going to go start by reading out what the market's doing right now. Just do a refresh and jump right on into it. If you're in the chat, you can jump in, throw your comments, throw your chats in there on the YouTube side or the Twitch side. Give a follow on the Twitch side, give a subscribe on the YouTube side. Check the monitor levels here. I'm not hearing anything. Let's see. Alright, just gonna start reading. I'll find the monitor playback, probably mute it. I'm not hearing any mic. I'm not hearing any mic. Oh wait, now I am hearing mic. Really turn this down a bit. Oh wait, now I am hearing mic. Really turn this down a bit. I'm just gonna start reading the Dow right now. As you can see, is up 2.59%. S&P 500 is up 2.42%. The Nasdaq is up 2.78%. The VIX is down 5.15%. Gold is up. Sorry, the monitor is great. Just jumped in there. VIX is down 5.11%. Gold is down 1.19%. Oil is down 1.29%. In the Europe markets, we have the FTSE 100 is down 0.31%. The DAX is up 0.24%. The CAC 40 is up 0.46%. FTSE MIB is down 0.27%. The IBEX 35 is down 0.06%. Stock 600 is up 0.14%. Asia markets. So, in the Asia Dow is down 1.85%. The Nikkei 225 is down 0.88%. Hang Seng is down 3.66%. Shanghai is down 2.25%. Sensex is up 0.34%. Singapore is up 1.46%. In the FX markets, the euro is down 1.4%. Yen is up 0.83%. The pound is up 0.36%. The Australia dollar is up 0.64%. Down 0.64%. The DXY index is up 0.25%. The WSJ IDX is up 0.26%. In the rates market, US 10-year is up 0.0987. Germany 10-year is up 0.1382. Italy 10-year is up 0.1155152. Yeah, it's 0.1152. Spain 10-year 0.0847 up. UK 10 years up 0.0631. Japan 10 years up, down 0.0110. I needed to read the zero, but anyways, in the future, DGIF is up 2.54%. S&P F 2.33%. 2.33% in the green. Nasdaq F is up 3.01%. Gold is down 1.21%. Silver is down 1.71%, and crude oil is down 1.32%. In the crypto markets, we have Bitcoin $20,604, up 0.91%. Ethereum $1,554.20 per ETH is up 1.72%. XRP is up 1.16%. Bitcoin Cash is up 1.5%. Litecoin, I feel like I don't even, these days I just probably won't even really read Bitcoin Cash or Litecoin. Monero's down 0.45%. Monero is a privacy coin and traceless. I don't have any. I've never worked with it, but the chain methodology within itself and the structure of its protocol is very interesting. Let's go into the first piece of news. Also, if you're on the comments in the chat, I can see you in the chat. Go ahead and jump your comments and chat in there, and I'll bring you up and read you out on the Jumbotron what you think is important, what you are following in the cryptocurrency, blockchain news, NFT, Metaverse, finance, stock, global news topics that you find interesting. Throw it in there, and we'll research it. Got any target coins and stuff that you want to talk about or share about or read about it? All right. First piece of news. Oh yeah, there we go. Because I'm on the wrong keyboard. I have two different machines running, so it's like I'm trying to grab from the right keyboard. Let's see. All right. Do I have the article? Let's see, make sure I have the article. Cointelegraph. Google launches blockchain node engine for Web3 developers. Google launches. Okay, I got that. Pause. I don't need that. Do I have the article? There we go. All right. Google launches blockchain node engine for Web3 developers. The service will simplify node infrastructure and onboarding for blockchain developers. According to an October 27th announcement, tech giant Google is launching an in-house blockchain node engine BNE based on Google Cloud. As a node hosting service, BNE enables Web3 companies to relay transactions, deploy smart contracts, and read or write blockchain data directly on Google Cloud. Ethereum will be the first blockchain supported by BNE, as told by Google. Today, quote. Today, who wrote this? Let me see that. Ziyuan Sun, writer for Cointelegraph. End quote. Today, manually deploying a node is a time-intensive process that involves provisioning a compute instant, installing an Ethereum client, and waiting for the node to sync with the network. It's fun. I'll say that. It's definitely fun. Google Cloud's BNE can make this process faster and easier by allowing developers to deploy a new node with a single operation and specify the desired region and network. The service intends to place nodes behind a virtual private cloud firewall, allowing only trusted machines and users to communicate with endpoints. Additionally, services such as Google Cloud Armor could help protect the nodes from distributed denial of service attacks. Being a fully managed solution, BNE will also have its own deployer team on call to monitor for potential outages. Google has been active in the Web3 sector regarding business development. Previously, Google partnered with Near Protocol to provide technical support for Ladder's grant recipients. 2 weeks prior, the tech giant teamed up with Coinbase to bring crypto payments to its cloud services. A number of prominent Web3 companies such as Solana, Hedera, and Dapper Labs are currently on board with Google Cloud. Layer 1 blockchain company Aptos has also said its node deployment times have been reduced by less than 15 minutes through its Google Cloud integration. Google Cloud has been there for a while. There's also Amazon AWS. You can build your own nodes and things like that. Let's see. Let's keep going into next piece of news. But that's cool. This piece of blockchain news there. But Amazon and AWS is like you still have to do your builds. So this is pretty cool because they're actually like one-stop, launch client type nodes that are ready to go. There I am on the wrong machine again. I should just move one keyboard out of the way. Yeah, because that happens. This is from Cointelegraph. Google. No, this is what? I pressed paste on there. Here we go. All right, it's from Reuters. Crypto exchange Binance Musk co-investor to help Twitter with blockchain. Crypto exchange Binance Musk co-investor to help Twitter with blockchain. So this is from writer Crystal Hughes. So I wanted to read about this, see what this is about. Binance, the world's largest crypto exchange, has invested $500 million into Elon Musk's buyout of Twitter, is creating a team to work on how blockchain and crypto could be helpful to Twitter, the company's spokesperson said on Friday, as one of Elon Musk's equity co-investors to fund his $44 billion deal. Binance said it will brainstorm plans and strategies that could help Elon Musk run the platform. The newly formed team will explore how to build on blockchain solutions to address Twitter's issues, including proliferation of bot accounts, a problem Musk has repeatedly complained about and almost reneged his offer on. Musk's Twitter takeover saga came to an end on Tuesday when the deal officially closed after months of twists and turns in and out inside the courtroom, and Musk immediately fired top chief executives at the social media platform. Twitter has begun to explore ways to incorporate blockchain technology under co-founder and former CEO Jack Dorsey, who has been a proponent of Bitcoin. It says there, latest updates, that's random crap in the middle of an article. In November 2021, Twitter launched an internal crypto team to build features that involve such technologies. The company introduced the ability for paid Twitter subscribers to use non-fungible tokens, NFTs, as their avatar photo. And, in this text message with confidence that are released as part of the litigation with Twitter, Musk discussed the possibility of placing Twitter on the blockchain, though he later appeared to decide such a move would not work. What is that, every single message? It's unclear how actively. It could go that way. So Twitter could be tokenized into some sort of ledger system of almost like how Reddit does karma. So your Twitter has some weird like shadow ban operation I've seen with some people who are supporting each other's networks, and then Twitter kind of like does it's not like I think they call it shadow ban, but I think what it really is it analytically places you in a certain category on Twitter of whatever's going on Twitter, and not outside of that for the tags. It's unclear who's networking amongst each other. It's unclear how actively involved co-investors like Binance could be on Twitter's future as a minority investor, since Musk fully controls the board and decision making in a now private Twitter. Most of his co-investors are funds such as Sequoia Capital, Fidelity Management, Andreessen Horowitz, and Brookfield. Binance's chief executive Changpeng Zhao, known as CZ, is an active Twitter user with over 7 million followers on the platform. Crypto exchange Binance Musk co-investor to help Twitter with blockchain. So we'll see how that rolls out. Maybe they'll do BSC stuff on Twitter instead of just Ethereum. That's what I would think would occur, right? Invest into that integration. I build on BSC chain, so it's fun over there. And they recently just secured in the bigger stance their bridging from the recent hack. MIT News, helping blockchain communities fix bugs. MIT alumnus founded Metrika has developed a suite of analytics tools giving blockchain communities visibility into their networks. This is from writer Zach Wynn on MIT News. The crypto enthusiasts are right. The next decade will see billions of people begin using the applications built off the distribution, user-owned blockchains. The new paradigm has been dubbed Web3, but Web3 still has some significant challenges to overcome if it's going to replace the digital world as we know it. Blockchain networks, for instance, are going to need to be an efficient way of detecting and resolving performance problems. Current analytic tools are built for companies to monitor their websites and apps. Such services need only be designed for one user. In the decentralized world of the blockchain, however, the users are the owners, turning the traditional model of maintenance and bug fixes on its head. The MIT alumnus founded company Metrika has developed a suite of tools to help the distributed communities of the blockchain world monitor and improve their networks. The company allows users to create alerts, access reports, and view real-time community dashboards that visualize network performance, problems, and trends over time. Metrika is community-based monitoring and collaboration platform founded from CEO Nikos Andrikogiannopoulos. SESM06 MBA 11 says we're making blockchain network telemetry a public good for everyone. These applications are holding billions of dollars in assets, so it's unimaginable that we wouldn't have service assurance to and deep visibility of what is happening in real time. Metrika is currently providing services on popular blockchain protocols, including Ethereum, Algorand, Flow, and Solana. The company plans to expand that list as other networks grow in popularity in hopes of enabling a much hyped shift to Web3. Our vision at Metrika is to become a critical layer of the Web3 world, stated Andriko Giannopoulos. 10 years from now, kids will be interacting with assets on their mobile phone. The idea of a bank account will be foreign to them. There will be no corner banks. The whole idea of finance will not go through physical stores and banks. You'll have assets on every application you use. In that world where everything is happening on a blockchain, how can Metrika help provide the observability, reliability, and visibility of the blockchain network? Bouncing ideas off MIT. This first came as this graduate student in 2004, and he likes to say he never really left. To his day, he lives in Cambridge, works at MIT, and returns to campus often. After earning his second MIT degree, an MBA from the Sloan School of Management, he began a telecommunications consulting job. During lunch breaks, he'd returned to MIT to work with the Venture Monitoring Services, VMS, where entrepreneurs from the MIT community can connect with mentors and receive advice. While kicking around telecommunications startup ideas, the VMS mentor connected him to internet entrepreneur Ruben Gruber, who suggested he explore the blockchain space instead. It was mid-2018 that many remember as crypto winter, or the lull in blockchain hype and a corresponding crash of crypto prices, but what's his first name? This name is very tedious, and Nikos. Okay. No, I don't even know where we were. I think it was over this way. After returning, he went to his internet entrepreneur, and then he was okay. So many remember the crypto winter in 2018, the lull in blockchain hype, and a corresponding crash of crypto prices. Nikos began researching the industry and networking with people in the blockchain space, including an MIT alumnus working at the blockchain company Algorand, which was founded by Silvio Micali, the Ford Foundation professor of engineering at MIT. A few months after their initial talk, Nikos returned to Gruber's office and told him blockchains were lacking monitoring operation intelligence. The problem stems from the decentralization structure of blockchain. Each user operates as a node in the system by creating, receiving, and moving data through their server. When users encounter a problem, they need to figure out if the problem lies within their node or involves the network as a whole. They might go on Twitter and Discord and ask other users what they're experiencing. Nikos says they're trying to triangulate the problem, and it takes several hours for them to figure out the issue, coordinate a response, and resolve it. To build Metrika, Nikos set up an open source node across the globe that pull data from the nodes and networks that aggregate those data into easy to understand reports and other tools. We act as a public infrastructure so users get visibility through dashboards, alerting, and reports, and then we add collaboration tools on top of that. Nikos explains. By 2019, Metrika had begun detecting problems with node performance, staking network latency, and errors like blocks not being produced in the right rate. Nikos showed his progress to employees at Algorand, who expressed interest, so he continued building out Metrika's suite of tools. You can see the idea of Metrika bouncing across the entire MIT ecosystem, Nikos says. This is crucial when you start companies that you have these kinds of insight and resource-rich environments like MIT, where you can iterate on your ideas and find team members to join you. So for enabling Web3, blockchains are no longer a niche technology around the world. Companies in finance and logistics are gamers and other creators are adopting the technology. The blockchain world is up to today has been a large experiment. Nico said, a lot of this infrastructure just hasn't been built, but Bitcoin proved this can work outside of the traditional finance world, and Ethereum is bringing it to another level with applications, smart contracts, and by creating essentially a decentralized smart computer. We think about enabling that world we see coming. As Matrika continues building out solutions to monitor blockchains, it also wants to offer services for many applications being built on top of that infrastructure. In the future, if a blockchain transaction doesn't go through in your Goldman Sachs or JP Morgan, you need to know why that transaction didn't go through and what happened, Nico said. Or if you're an application playing a game or buying assets and the transactions are lagging, you need to understand why the user experience is being impacted. In Web3, these things are very important because at the scale of the flow value we're talking about. In Ethereum, it's basically just because there's so many freaking things minting. And so they definitely have to do with the new upcoming migrations into proof of stake. The network upgrade of Splurge is definitely going into Ethereum to upgrade infrastructure and even reduce network gas costs in the proof of stake structure. For Nikos, improving blockchain performance is not just optimizing networks, it's also about helping to usher in the world of open finance and open applications that Web3 promises. We've reached 17 hours of outages on blockchain networks in some cases, but what's even more important to me is not the outages themselves, but the infrastructure needed to avoid them as the industry continues maturing. Nico says these problems can compromise trust as we're onboarding users into the Web3 world. Matrika's mission is to enable a compelling Web3 ecosystem. Cool. Awesome tools being built there from Matrika, helping blockchain communities fix bugs. Let's go. Keep going. So this next one is from CoinDesk. Dogecoin, Cardano weigh on crypto major as U.S. tech stocks plunge. So yeah, this is the weight on crypto majors with this tech stock plunge. Shares of big tech companies slid on Wednesday and Thursday following dismal earnings report. This is from writer. Oh, what happened here? This is from writer. Shoria Malwa. For CoinDesk in the markets. This is for cryptocurrency, so we're going out of blockchain focused news into crypto news. Then we're going to go into NFT news, some Metaverse news, finance news, and global news, and close out the stream for the day. A couple pieces of tech news as well. Crypto majors slid in the past 24 hours following a plunge in U.S. technology stocks as key companies reported lower than expected earnings. Bitcoin has previously followed the movement in technology stocks. The equities drop came after an unexpectedly strong gross domestic product report in the U.S., with economic growth expanding 2.6% in the third quarter versus expectations for 2.4% growth as reported. Tech-focused NASDAQ 100 finished 1.63% lower on Thursday, while the S&P 500 fell 0.61%. Doge rebounded after losing some 7.7% in 24 hours following a two-day rise as Elon Musk neared his takeover of microblogging service Twitter. Musk has been a major supporter of Doge, which has become a proxy to sentiment about him. The entrepreneur's statement about the token has also consistently influenced the price. The token was trading 5% higher over 24 hours. Cardano's ADA led declines in major crypto majors, falling almost 6%. Bitcoin lost about 2%, while Ether and Solana fell 3%. BNB's chain tokens showed nominal losses as crypto exchange Binance, which issued BNB and supports development on BNB chain, confirmed its equity investment in Musk's Twitter. Crypto tracked futures racked up to just 97 million in liquidations, a lower than usual figure that suggested the declines were mostly spot driven. Weak third quarter results from Microsoft and Google Google parent Alphabet weighed on U.S. markets on Wednesday. The companies reported a slow in revenue-generating units on Thursday. Shares of Amazon fell some 13% and warned of a slower than expected Christmas period amid cautious consumer spending. Operating income at Amazon decreased $2.4 billion in the quarter compared to $4.9 billion in the same period in 2021. Overall shares in Alphabet, Apple, Amazon, Meta, and Microsoft have dropped by around $850 billion since Monday, as per reports. So that's piece there. Cardano weighs on crypto majors after tech stocks take a plunge. going. Visa's trademark application suggests more involvement in the crypto space. The company's trademark owner applied for its name to be used in software to view, access, store, monitor, manage, trade, send, receive, transmit, and exchange crypto and NFTs. The major credit card company Visa may be planning to explore digital wallet services based on 2 recent trademark applications, according to records submitted to the U.S. Patent and Trademark Office, USPTO, on October 22nd. The Visa International Service Association filed 2 applications for its charter marked to be used in software to view, access, store, monitor, manage, trade, send, receive, transmit, and exchange crypto assets and non-fungible tokens, or NFTs. The filings also suggested the credit card company may be exploring a move into the Metaverse, with its namesake used in virtual environments in which users can interact for recreational, leisure, or entertainment purposes. Some reports suggested that there are more than 1 billion Visa cards in circulation around the world. The company has previously partnered with crypto firms to offer credit and debit cards tied to crypto payments. The trademark filings followed those of MasterCard, which applied to the USPTO in April to use its logo in the Metaverse and NFTs. Some reports suggest there are more than 1 billion. There are more than 1 billion Visa cards in circulation. Okay, this just jumped or something. I don't know what happened here. Well, there are some key points here, I guess, in quote. Visa has filed 2 trademark applications, basically, managing digital, virtual, and cryptocurrency transactions, digital currency plus cryptocurrency wallets, NFTs, and virtual goods, providing virtual environments and more. I got hashtag Metaverse here, Web3 cryptocurrency NFT. This is from something on Twitter there. So some reports suggest there are more than 1 billion. There are 1 billion Visa cards in circulation around the world. The company has previously partnered with crypto firms to offer credit and debit cards tied to crypto payments. The trademark filings followed those of MasterCard, which applied to the USPTO in April to use its logo in the Metaverse. And I think it's meant to say on NFTs. And then I think I flicked the mouse accidentally, but lost my place. The credit card company has announced gradual forays in the crypto space in recent years. In March 2021, Visa said it planned to launch a pilot program allowing its partners to use USD coin to settle transactions made in fiat. The company also spent $150,000 to acquire CryptoPunk in August 2021 as part of an effort to... Really? Just $150,000? I thought there were more than that for CryptoPunk. As part of an effort for first-hand understanding of the infrastructure requirements for a global brand to purchase, store, and leverage an NFT. I mean, it makes sense that they would start with the CryptoPunk, right? This next article is from Cointelegraph. Ethereum sets records, ETH short liquidations wiping out $500 billion in 2 days. With new all-time highs in short liquidations, at least when measured in dollars, point to overly bearish market sentiment. This is from writer William Suberg for Cointelegraph. In the crypto market, Ether is setting liquidation records this week as comparatively modest price uptick reveals how bearish the market has become. Data from on-chain analytics platform CryptoQuant confirmed that United States dollar-denominated short liquidations hit a new all-time high on October 25th. 2 days, $500 million in ETH shorts. Bring my chair up in height. It's not just Bitcoin causing the bears severe pain this week. Data from exchanges also show that Ethereum shorters have suffered heavy losses. ETH delivered impressive gains on October 25th to 26th, rising from lows of 1337 to highs of 1593 on Bitstamp before retracing, according to data from Cointelegraph Markets Pro and TradingView. While nothing unusual for crypto and for altcoins in particular, the market changes triggered by the price action stood out. As with Bitcoin, the market had become heavily short. They were shorting ETH, basically expected a trip to new macro lows after weeks of sideways action and failed breakouts. It thus only took around $250 of upside to liquidate more short positions in US dollar terms than ever before. $275 million on October 25th, with another $250 million the day after. Over $500 million worth of positions were wiped out in 2 days, and not even a record in ETH. The value of the positions totaled 189,638 ETH and 161,986 ETH respectively. ETH short squeezes for the last 2 consecutive days. Daily short liquidations across all exchanges reach all-time high. Crypto Quant CEO Ki-Young Zhu commented on the data. BTC flushes out the speculators as Cointelegraph reported the picture on Bitcoin was broadly similar as price performance solidified. According to the latest figures from on-chain analytics resources CoinGlass, October 25th and 26th saw 328 million and 332 million of short liquidations, respectively, across exchanges. The tally for October 27th was already much lower at 5.7 million. This firmly in line with established norms as Bitcoin's consolidated above 20,000. Nonetheless, exchange users were betting on the rally continuing, as evidenced by the largest ever daily BTC balance decrease on major exchange Binance. So this is Ethereum sets record ETH short liquidations, wiping out $500 billion in 2 days. Let's go into the next article here. Twitter will allow users to buy and sell NFTs through tweets. Twitter will let users display NFT marketplace listings from certain platforms, including a button to let them buy and sell the collectibles. This is from writer Andrew Hayward. This is definitely going to scale it up, right? Especially when how we transact our NFTs and selling the NFTs done right through Twitter with our wallets, interconnected with our PFPs, and through live spaces on Twitter. Specifically, basically around like art transactions. Social media platform Twitter today announced that it will let users buy, sell, and display NFTs directly through tweets in partnership with 4 marketplaces. The integration, called NFT Tweet Tiles, displays the artwork of an NFT as a dedicated panel within a tweet and includes a button to let users click through a marketplace listing. The integration, which is still in testing, currently works with marketplaces from 4 specific partners: Solana-centric marketplace Magic Eden, multi-platform NFT marketplace Protocol Rarible, Flow blockchain creator Dapper Labs, and sports-centric platform Jump.trade. So here's a tweet here. Now testing NFT tweet tiles. Some links to NFTs on Rarible, Magic Eden, Dapper Labs, and Jump Trade NFT will show you a larger picture of the NFT alongside details with the tile and the title and the creator. With more step in our journey, one more step in our journey to let developers impact the tweet experience. So you can see the marketplace. Collectively, those marketplaces can span several blockchain networks, including Ethereum, Solana, Flow, Polygon, Tezos, and Immutable X. Nice, they got Polygon in there. Cool. And Tezos, that's really cool. Obviously Solana, right? And they would be cool to see Binance in there, right? Twitter representative confirmed to Decrypt that the feature is blockchain agnostic, so all networks are supported so long as the links are from a partnered marketplace. Thanks Elon Musk for making this happen. Now drop a Magic Eating URL in your tweet and watch the magic unfold. Tweet tile, #tweet tile at Twitter. This is from Magic Eden. The representative added that the feature is currently being tested with select Twitter users across iOS and web, and that those users will see the NFT tweet tile integration if they're in the test group. A Twitter Blue premium subscription is not required to use the feature. Twitter previously supported NFTs as verified profile pictures through its Twitter Blue subscription service in January, but it is currently only supporting Ethereum NFTs. Says from Twitter will allow users to buy and sell NFTs through its tweets. This is from Gizmodo. Deface NFT art mashed potatoes. Protest Matt Reed. You can now protest at home by defacing priceless NFT art with digital mashed potatoes. Become a climate activist without leaving your desk. From writer Andrew Liszewski. attempting to deface or destroy priceless works of art in the name of climate activism is all the rage right now. But what if you can make it to the Louvre in Paris? What if you can't make it? Sorry, what if you can't make it to the Louvre in Paris or National Gallery in London? Don't worry, there are still thousands of priceless works of art available online, and Matt Reed has created a simple browser tool that lets you deface NFTs with a simple click. Matt Reed has made a name for himself by keeping their finger on the pulse of internet trends and then coming up with exactly the right tools the world needs. In early 2020, just as everyone was starting out to get swamped with video calls while hiding at home in the burgeoning pandemic, Reed created a digital twin of themselves to sit on those calls, complete with voice-activated automated responses to make it more convincing. And when the burden of endless video calls became most unbearable just a few months later, Reed came up with a tragically short-lived tool that could rickroll Zoom calls with a goal of convincing coworkers to avoid sending an invitation to rickrollers. If you want in on the food waste protest action without wasting real food or ending up in jail, you can find the code for Reed's Protest-O-Matic tool on GitHub. All you need to do is create a new bookmark in your browser of choice, name it the Protest-O-Matic, and then paste the small chunk of code into the URL field. Visiting a website containing your favorite NFT and then activating that bookmark brings up a simple on-screen tools giving you the option to deface the masterpiece with liquefied buttery mashed potatoes or pie with every click. The tool works on almost any website. Just look at what I did to our latest gizmodo.com. It includes a handy template for where to superglue your hand to the screen so everyone knows you're very serious about whatever cause you're advocating for today. Okay, there we go. So now we have some awesome tools so you can protest at home by defacing priceless NFT art with digital mashed potatoes and or gluing your hand digitally to the screen. Let's go. And you don't even have to go to the Louvre. Saves the janitors, poor janitors, work. Well, having to clean up mashed potatoes off the artworks. NFT Hype Cycle over major exchanges expected in 2023 report. And you actually save real food. So that food feeds others and you don't need to waste it. No, and that's a whole nother topic. New York-based technology consulting firm Activate Consulting has projected that 2023 will see the end of NFT's hype cycle, with the token class expected to undergo major changes in how they are used and regarded. The fast facts of here within this article. This is from writer Oisin McIlroy for finance. So we're shifting out of crypto news going into this NFT news stuff. Obviously, we just closed out the article for the Twitter integration of NFT sales. NFT hype is over, declared Activate's report, revealing that the token class recorded just $1.1 billion in sales for August 2022, a year after sales peaked at $6.2 billion in August 2021. Activate believes this downturn will force NFTs to adopt more tangible use cases rooted in established technology and media behavior such as e-commerce and social media. Activate expects that the bulk of these new NFT uses will target problems that technology has a strong rationale for solving, including community building, reward customer loyalty, and legal automation for content, digital real estate, and digital collectibles. They also report a decisive change in user rationale for purchasing NFTs, the token class increasingly regarded as an investment and increasingly as a collectible for display. Activate also revealed that less than 1/3 of U.S. adults are aware of what an NFT is. So that's short there in Yahoo Finance. NFT hype cycle over, major changes expected in 2023. Keep going on here, reading through the news. So we have another piece of news here. This is from Forbes. Gucci Vault opens in the sandbox, bringing luxury fashion into the metaverse. From writer Kayleigh Moore. And we're going into some metaverse news. So Gucci, the first luxury brand to build its own space within the digital real estate platform, the Sandbox. cementing its place as first mover in the metaverse. The experimental concept store Gucci Vault Land will be available from October 27th to November 9th. Players can experience the vault at 360 degrees through a play-to-know narrative and complete activities for a chance to win an exclusive reward in sand, the utility token for or currency for the sandbox built on Ethereum blockchain. Envisioned by the creative director Alessandro Michel or Michael or Michael or Michael. The vault represents a careful curation of rare vintage Gucci pieces, the dialogues between contemporary creators in the house, and the enthusiasm for NFT artworks, combining these different facets with the power of community. The ultimate goal for this effort is to educate the Web3 community on Gucci's heritage via gamification. Gucci opened the doors to its vault to everyone. No NFT or ticket required. Users can start in the Garden of Curiosities and wander through a grand entrance hall where the adventure unfolds across a series of rooms, each designed around the brand's story. For example, guests can restore a vintage Gucci bag in the Vault Vintage Lab, or crack a riddle in the Vault Room, or rhyme. There are also digital collectibles, from hats and skate ramps to even a car, each envisioned as a showpiece for owners to display proudly in their own lands. Additionally, as a bonus for Gucci's Vault community, those with a Gucci Vault NFT in their crypto wallet, such as Super Gucci or Gucci Grail, receive a Gucci Vault Aura collectible, a piece of wearable fashion for avatars within the sandbox. The Vault will encompass all of Gucci's Web3 efforts under one umbrella, but this is not the first time the luxury brand is making a bold move toward the metaverse. Gucci was the first luxury brand to launch an NFT in May 2021 and introduce Gucci Garden in the metaverse as well as within gaming platform Roblox. The recent appointment of Robert Trefus as CEO of Gucci Vault and Metaverse Ventures is one more indicator of Gucci's determination to scale its metaverse efforts and expand its virtual experiences. But Gucci isn't alone in these efforts. Other luxury fashion brands are ramping up their investments in metaverse and Web3 technologies as well. Despite Forrester's predictions, the NFT and metaverse hype will cool off in 2023. Some of the biggest names in the fashion industry continue to double down on their digital efforts. Dolce & Gabbana's 9-piece NFT collection set a record of nearly 6 million. Burberry has an NFT collection in Mythical Games Blanco's Block Party blockchain game, and the Balmain and Barbie partnership features ready-to-wear pieces, accessories, and exclusive NFTs. According to Statista, the gold metaverse market will be worth $47.48 billion in 2022, expected to surge to $678.8 billion by 2030. On this note, Meta is still betting heavily on the rise of the metaverse, adding an avatar store on Instagram, Facebook, and Messenger where users can buy digital clothes to style their avatars. Balenciaga, Tom Brown, and Prada are the first 3 designers to partner with Meta on the digital fashion experience, which is expected to be available soon in VR. According to Carol Hissam, Senior Director of Product Innovation at Farfetch, the metaverse is the next stage for luxury shopping. This explains why fashion brands are in a mad dash to plant their digital seeds in the metaverse and future-proof their business. From creating exclusive personalized experiences for their communities and tailoring unique loyalty programs and selling digital assets and building excitement for a new product launch, forward-thinking brands are slowly setting the foundation for the future of the fashion industry. This is from Gucci Vault, opening their vault in the sandbox, bringing luxury fashion into the metaverse on the blockchain. Let's keep going here. If I can even click anything. What if I just click it? Let's just do that. Let's just start doing that. Close out the prior. Just trying to save on the window space. Anyways, this video always plays in lags. Why the metaverse is good, even if Metastock says otherwise. This is an analysis from writer Brian Sawsey, anchor editor at large for Yahoo Finance. Pause this. Meta has no choice to spend billions of dollars. Meta has no choice but to spend billions of dollars on building out the metaverse if it wants to control its future. Goldman Sachs tech analyst Eric Sheridan argues, taking a step back from the recent stock performance, both year to date and in the aftermarket, we see platform infrastructure investments by Meta, which started in mid 2020, as both continuing to build independence from a volatile range of outcomes from future mobile OS platform changes and aligned with a strategic shift towards short form video and form the social graph to the interest graph. Sheridan wrote in a note to clients on Thursday. Nevertheless, Wall Street continues to have a bone to pick with the digital world being created by Mark Zuckerberg, dubbed the Metaverse. Meta stock crashed 22% on Thursday as the Metaverse and Instagram owner continued to spend aggressively to build out its Metaverse. The build out contributed to a 1,600 basis point plunge in Meta's third quarter operating profit margins. Meta execs signaled that the torrid pace of spending on the virtual platform will persist well into 2023. The social media platform outlined about 13% year-over-year expense growth for fiscal year 2023, well above the street's forecast of 7%. Morgan Stanley analyst Brian Nowak estimates Meta could spend a whopping $69 billion in capex alone in the next 2 years and help support various initiatives, including the Metaverse. Nowak sees these investments as a signal of higher required structural capital intensity moving forward as Meta adjusts to the post-IDFA social media landscape that is more driven by short-form video. Meta's outlook wasn't very good. Meta's fourth quarter revenue guidance came in between $30 billion and $32.5 billion, while Wall Street was expecting $32.2 billion. Brian's, okay. So why the Metaverse is good, even if Meta stock says otherwise. Let's go on to the next article here. This is from IGN. The Metaverse is a poorly built video game. Xbox boss Phil Spencer says, a metaverse that's like a living room is not how I want to spend my time. Xbox boss Phil Spencer is not impressed by the metaverse as it is currently. Spencer is a WSJ, a Wall Street Journal Live is at Wall Street Journal Live taking questions and was asked about his thoughts on the metaverse as reported by The Verge's Tom Warren. Spencer was critical of the version of the metaverse that currently exists today. It's a poorly built video game. Building a metaverse that's like a living room is not how I want to spend my time. However, Spencer adds that it's early days and that this will evolve. The metaverse is a hot buzzword of the year, with Meta, formerly Facebook, the company championing it the hardest. However, Spencer's comments about a living room could be a veiled jab at Meta, which is positioning the Metaverse as a business tool where employees can take meetings in the Metaverse. The definition of a Metaverse is still hazy as Fortnite is considered a Metaverse where folks can bring in multiple characters and properties together in a single shared world. So the MetaQuest Pro announced images. So I don't know, there's some MetaQuest stuff there. While there's no indication that Xbox is pursuing a Metaverse strategy, we can expect the question to linger as companies like Meta continues to pour resources into the Metaverse. Despite the recent bad press, the company has suffered on growing out its ambition. Elsewhere, as the WSJ Live, Spencer commented on Xbox's seemingly shelved streaming device as well as the future of Call of Duty. Is that it? Yeah, that's it. I think that's it. That's the conversation down there. All right, so that's that. For the Metaverse is a poorly built video game, Xbox boss Phil Spencer says. Let's go into the Yahoo Finance. I'm going to shift over into finance news, stock and finance news. Stay out of financial la la land. Suze Orman says most Americans need to do this now to survive their next crises. Lauren Bird, writer for Yahoo Finance. It's never been easy to save money, to think about future needs when present ones are so pressing. Americans have failed to do so for decades, says financial expert Suze Orman. Majority of the people of the United States have never had more than $400 million in a savings account to their name. Orman tells Money Wise. So if something happened, an emergency happened, they wouldn't have that money. That's when a monetary crisis becomes a long-term disaster. People tap into their retirement savings and their credit cards, losing even more money in the form of fees, interest, and missed earnings. Orman has written several books on personal finance and hosts the podcast Women and Money, but now she says it's time to go beyond advice. For 40 years, I've tried to change the mindset of people. People change when they're ready to. They don't do what they're told to do. They do it when they know they have to do it. Two proposals before Congress could make new savings options available through employers, but Orman is refusing to wait. She's created her own system she says will help Americans finally put money away by taking the decision out of their hands. So I guess there's some don't miss headline there of want to invest your spare change but don't know. There's an app for that. You could be the landlord of Walmart, Whole Foods, and Kroger, the collect fat grocery store anchored income. Is this part of the article? Or is this no? Oh man, it's just crap in between. Okay. Congress steps in. Orman is right about how fragile most American finances are. Last year, only 32% said they could handle a sudden $400 expense. It's only becoming harder this year thanks to inflation and higher interest rates, but Orman argues this is not a new phenomenon. It may feel like it's new because of inflation. Many people alive today never experienced inflation back in the 70s, and now they're going, oh my god, inflation is eating up our money, says Orman. So while Americans may be notorious bad savers, it's not all their fault. As wages fail to keep up with costs, it's becoming difficult even for middle-class income workers to squirrel away extra money. So difficult that Congress is looking to legislate an emergency savings account. Two proposals were approved by separate Senate committees in June as part of the Securing a Strong Retirement Act, also known as the Secure Act 2.0. One of the proposals, the Rise and Shine Act, now before Congress, would give workers the ability to opt into an emergency savings account that would automatically skim 3% off their paycheck. Employees would save up to $2,500 in the account, with an excess savings going to their 401k. The other proposal under the EARN Act would allow workers to take $1,000 out of their 401k each year to cover an emergency without suffering the usual early withdrawal penalties. They would be required to pay it back within 3 years. Finding a private solution, the success of 401ks at getting Americans to save for retirement became the inspiration of Orman's savings venture, SecureSafe. The system launched in 2020 during the pandemic allows workers to automatically build up an emergency savings account with extra financial contributions from their employer. We came along and said, oh my god, if that works for 401k plans, it would also work for our emergency savings account, says Orman. Orman's co-founder, Devin Miller, says using the workplace as a staging ground for saving makes it a lot easier to actually take action. If you learn about the behavior of saving and they're given an easier path to do it through work, we're proven with healthcare and retirement that employees will end up in a better position if a nudge happens that way. Yeah, I most definitely agree with that. That's a cool intake here. Let's go with it. We've been able to make a big impact on healthcare and on retirement in this country by making it a workplace conversation and creating a safe place to do that. Automation is the key. Employers can offer SecureSafe as a benefit for their workers. It will automatically take a small percentage off the top of their wages and put it in an easily accessible savings account. The employer will also match some of the funds, typically just a few dollars per paycheck, while employers can also add money manually. Orman says it's automation that makes a real impact. You could tell people from now until doomsday that they should do something, she says. That's why we need to help do it for them. According to Orman, it's working. You know what they'll say. Why didn't I do this a long time ago, she says. When employers kick a little on top, it adds to the incentive to save, says Miller. We usually see about $100 per employer per year, but it's done in a drip campaign. So if you put in $25, your employer is going to put in $5. So it's not a lot of money, but it creates the incentive to start and stick to it. Savings brings security. Orman and Miller say they are seeing results from companies that have implemented SecureSafe, that people get excited when they see their accounts grow, and that transfers to a better quality of life. Why should employers care in the first place? Because they argue a better quality of life makes for better employees. When you have a financial stress, something's come up and you don't have the money to handle it. If you're You think you're concentrating on work, Orman says, or you're in financial la-la land to figure out, what am I going to do? A dramatic 90% of Americans stress out about money, according to a study by Thriving Wall, impacting both mental and physical health through mood, sleep, and relationships. So when they have a place to go, they know that their employer cares about them. They start to care about themselves, says Orman. They don't even miss a $25 paycheck. They don't even miss the $25 paycheck. Then a lot of times they come back and say, I'll raise it to $30 then $40. With both Secure Safe and proposals before Congress, the focus is on a low barrier to entry, because the hard part, Orman has learned over the decades, is also convincing people to get started. Usually people have to hit rock bottom before they make a change, says Orman. Okay, so Secure Safe, right there. State of financial la-la land sues Orman, says most Americans need to do this now to survive their next crisis. Let's go right into let's see if the BBC News was going to let us read today. Why lasers are being used to write inside diamonds. This is in the tech news. Appearing, this is from writer Ben Morris, technology of business editor at BBC. I'm peering through a jeweler's eyeglass, looking for the BBC logo. Close that. Looking for the BBC logo has been inscribed inside a small diamond. The inscription has been made using unique technology developed by Oxford-based Obsidia, or whatever it is. I'm going to say Obsidia. Its machines are the only ones on the market that can penetrate the surface of a diamond and manipulate its atoms. The logo I am trying to find is less than half a millimeter wide, despite instruction from Lewis Fish, head of product at Obsidia. I can't see it. It is very difficult, he says. They're intentionally very fine, and it's really trained jewelers that they're aimed at. But why would anyone want to write on the inside of a diamond? The big thing that's happening in the industry is traceability and transparency, says Andrew Remmer, the chief executive at Obsidia. Can you see the inscription in the diamond? Okay, yeah. He believes that Obsidia's technology can improve on the existing way that diamonds are identified. There are already systems for tracing and tracking a diamond from when it first emerges from a mine as a rough diamond through the cutting and polishing phase and on to the retailer. But the process is far from perfect. Last year, Human Rights Watch HRW criticized jewelers, saying they could not identify the mines of origin for their diamonds. That is important, according to HRW, because labor rights violations, violence, and other abuses have remained a serious problem in gold and diamond mining. It is also becoming crucial for diamond sellers to be able to distinguish between those that have come from mines known as natural diamonds and the growing number of diamonds produced by machines known as lab-grown diamonds. The technology for producing lab-grown diamonds is improving all the time, and they are a fast-growing section of the market. But naturally, diamonds are considerably more expensive than lab-grown gems, so it is important to have a reliable way of telling them apart. Mr. Remmers explains that his system can provide a fail-safe verification by inscribing data inside the diamond, data that is impossible to remove but does not devalue the gem in any way. People who are making diamond jewelry, they want to be able to show to the consumer this is a natural diamond and from an ethical source, says Mr. Remmer. Obsidia's diamond inscribing machine is the size of a very large photocopier. Inside is a pulse laser that emits very short laser bursts. Such high-powered bursts can accurately manipulate materials like diamonds and other gems at very small scales. However, just pointing the laser at a diamond is not enough. The diamond structure would scatter the beam. Diamond is about the most difficult material out of the transparent materials to process with lasers, says Mr. Remmer. Obsidia's system tunes the laser so that it can pass through the surface of the diamond, usually to a depth of 1/4 of a millimeter. Instead of randomly bouncing around the diamond, the laser comes to a pinpoint focus to create the inscription to suit the client's needs. If the diamond needs an identification number which is invisible to anyone without powerful microscopes, then the system can alter the diamond at the molecular level. However, if a jeweler wants its logo to be visible, then the laser can be used to make bigger changes to the carbon structure of the diamond. At the moment, Obsidia can assemble only a small number of the 400,000 euro are $480,000 machines at the time, but is expanding its operation and expects soon to be selling dozens of the machines a year. Mr. Rimmer is optimistic that the laser technology will have the application soon. The laser can make atomic scale changes to create circuitry inside the diamond that could be useful for making instruments for radiation detection, where diamond's durability is also an asset. Potentially, such circuitry could also be used in quantum computers, machines that can perform complex calculations in a fraction of the time taken by existing devices. Quantum computers work by exploiting the weird quantum properties of individual particles. They are hard to build and are still in their early stages, but diamonds offer a promising way to isolate and use quantum properties of nitrogen atoms. But for now, Obsidia is focused on the diamond verification business, and that is a good place to be, according to Eran Golan, an Israel-based consultant to the diamond industry. There's a growing movement to track diamonds in an impartial way, he says. At this point, none of the systems are perfect because nothing is implemented fully from the mine to the store. A digital ledger technology blockchain will become more widespread in the jewelry industry, according to Mr. Golan. I knew they were going to say, I mean, that makes sense. It only makes sense to have, obviously, like digitally ledgered blockchain transactions and inscriptions tied to the actual diamonds on the diamonds of a code, of a hash, or whatever have you. That can be a string, or maybe even a chip embedded somehow into the diamond, or utilized with the diamond to verify that this was a transaction that came from this mine, etc., etc. It's all hashed out in transactions from the mine itself when the diamond was found in the rough. But for now, Obsidia, I already read that part. He says the verification methods are going to evolve as miners are keen to distinguish their diamonds from those made in factories, and consumers want to know if their jewelry is ethically sourced. If I walk into your jewelry store on Main Street, USA, and ask, can you guarantee that particular diamond that you're offering to me is ethical, and you blink, you have a problem, he says. Alright. So, this is from writer Ben Morris for BBC, why lasers are being used to write inside diamonds. I'm interested in that machine too. Let's see. Let's see if it'll bring us into another article. If it's going to cap us. This is another piece of tech news. It's from writer Shiona McCallum for BBC. The crash dummy aimed at protecting women drivers. Since the 1970s, crash dummies, mechanical surrogates of the human body, have been used to determine a car's safety. The technology is used to estimate the effectiveness of seatbelts and safety features in new vehicle designs. Until now, the most commonly used dummy has been based on the average male build and weight. However, women represent about half of all drivers and are more prone to injury in 4 to 5 accidents. However, women represent about, the dummy that is sometimes used as a proxy for women is a scaled down version of the male one, roughly the size of a 12-year-old girl, at 149 centimeters tall, 4 feet 8 inches, and weighing 48 kilograms, 7 ST, 5 pounds. What is that? 7 ST? I don't know what that. It represents the smallest 5% of women by the standards of the mid-1970s. Okay. However, a team of Swedish engineers has finally developed the first dummy, or use the more technical term, seat evaluation tool designed on the body of the average woman. Their dummy is 162 centimeters, 5 feet 3 inches tall, and weighs 62 kilograms. I've never heard this 9ST, 7 libs. More representative of the female population. So we have safety regulators not asked for it before now. So why have safety regulators not asked for it before now? The difference between the U.S. male and the female crash test dummies is that 72 kilograms, based on average man in the 1970s, and then 49 kilograms based on the smallest 5% of American women in 1970. I guess they're basically going off the 1970s research because that's the best adequate research that data that they compile from historical records of averages. I don't know. Maybe they should do some more updates ones too, though, I guess. I don't know if they compared and contrasted. A male decision. You can see that this is a bias, said Tajark Kruzinger, who specializes in the field for Toyota in Europe. When all the men in the meetings decide, they tend to look to their feet and say, "This is it." I would never say that anybody does it intentionally, but it's just the mere fact that typically a male decision, and that's why we do not have the average female dummies. Several times a day in a lab in the Swedish city of Linköping, road accidents are simulated and the consequences are analyzed. The sensors and transductors within the dummy provide potentially life-saving data measuring the precise physical forces exerted on each body part in the crash event. The team recorded the data including velocity of impact, crushing force, bending, torque of the body, and braking rates. They are focused on seeing what happens to the biomechanics of the dummy during low-impact rear collisions. When a woman is in a car crash, she is up to 3 times more likely to suffer whiplash injuries in the rear impacts to comparison with a man, according to U.S. government data. Although whiplash is not usually fatal, it can lead to physical disabilities, some of which can be permanent. And these statistics that drive Astrid Linder, the director of traffic safety at the Swedish National Road and Transport Research Institute, who is leading the research at Linköping. We know from injury statistics that if we look at low severity impacts, females are at higher risk. So in order to ensure that you identify the seats that have the best protection for both parts of the population, we definitely need to have the part of the population at highest risk represented, she told the BBC. Dr. Linder believes her research can help shape why cars are specified in the future, and she stresses the key difference between men and women. Females are shorter and lighter than males on average, and they have different muscle strengths. Because of this, they physically respond differently in a car crash. We have differences in the shape of the torso and the center of gravity and the outline of our hips and pelvis, she explained. But Dr. Linder will still need regulators to enforce the use of the average female she has developed. Currently, there is no legal requirement for car safety tests for rear impact collisions to be carried out on anything other than the average man. Although some car companies are already using them in their own safety tests, they are not yet used in the EU or US regulatory tests. Engineers are starting to create more diverse dummies, including dummies that represent babies, elderly, and overweight people. The average female dummy in Linköping has a fully flexible spine, which means the team can look at what happens as the whole spine from the head to the lower back when a woman is injured. U.S. company Humanetics is the largest manufacturer of crash test dummies worldwide and is seen as leading the voice when it comes to the precision of technology. CEO Christopher O'Connor said told the BBC he believes that the safety has advanced significantly over the last 20 to 30 to 40 years, but it really hasn't taken into account the difference between a male and a female. You can't have the same device to test a man and a woman. We're not going to crack the injuries we are seeing today unless we put sensors there to measure those injuries. By measuring those injuries, we can have safer cars and safer airbags with safer seatbelts, with safer occupant compartments that allow for different sizes. The UN is examining its regulations on crash testing and will determine whether they need to be changed to better protect all drivers. If changes are made to evolve a crash that tests a dummy representing an average female, there is an expectation that women will one day be safer behind the wheel. My hopes for the future is that the safety of vehicles will be assessed for both parts of the population, Dr. Linder said. Alright, so that's crash dummy aimed at protecting women drivers, and more tech news from the BBC. And I have one last piece of news here. I'm going to close out the stream for the day. This is in general global news. It's from the New York Times. Is the New York Times going to let me read this? I don't know. We'll see. Sometimes not. Yeah, it's because I opened it once. Well, I'm going to close out the stream for the day. We'll close out the stream. If you're on the YouTube side, please do subscribe, turn on the bell notifications on the YouTube, follow on the Twitch side. And if you're into NFT art, check out KINSART, KINZART, one word, all smushed together letters, on OpenSea or Foundation if you want to check out my NFT artwork. And follow me on TikTok, KinToshi Instagram, KinToshi and on Twitch, KinToshi for extra gaming streams and content. I'll be streaming Skyweaver in a little bit. So otherwise, I will see you back on Monday to recap the weekend news and go on into the new news for the Monday and week-to-week, day-to-day news throughout the week. Have a great and safe weekend. Cheers. Ciao. Peace be with you. Onamashigas. Stay well. Stay safe. Also, I have all of these articles on the recap on the YouTube side, on the recorded recap video, and Blockchain Tech and Finance News playlist.